The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, David White.
And welcome all to another excellent edition of the Power Trading Hour, where it doesn't matter where you're at. If you're standing on your head, if you're locked in an elevator, as long as you're here and can listen to my dulcet tones at the appointed time.
The following takes place between 2 p.m. and 3 p.m.
So what do we have? We've got a bounce that everybody is certain to signal a low. I'm looking at it as a gift horse and not one in the mouth. I always understood that to be their look at gift horse in the mouth. It's all about teeth, isn't it? I think it's all about teeth, even if they're horrible teeth. You can sell it to the rendering plantation. So I'm looking at this as great. I didn't have any short positions on. I did have one long, which I sold just not too long ago, mostly because I'm a little bit worried about the lack of movement in the sector, and also a few other things. I still think that this is a bear market, and we have the kind of rips we have today in a bear market many times. I'm still thinking that shorting the rips and covering the dips is the best thing to do. We have not tested the previous low. I'm still worried that the rapid, or I'm going to even call it rabid, foaming at the mouth opportunity that I see by so many people thinking that the low is in, tells me that the low is not in. It almost always is when there's severe pessimism, which I have not seen yet. Everybody just says it's lower and I got to buy it. It's lower and I got to buy it. When everybody just throws up at the thought of buying anything, generally that's when you find a low. And even me, thinking I want to buy the other side of it, when I'm physically sick at the thought of buying and putting my money into something, that's generally where you find a low that you can hang on to for a while. You're going to have these rips and dips and everything else. I'm still looking for a test of 4,100. Of course, a few things going on today. Dr. Fauci said the pandemic is over. The White House quickly came over and threw him under the bus and then backed over him a few times just to make sure. So I don't know if the pandemic is over or not. Certainly the White House didn't want it. So we're getting mixed messages about that. But I think a lot of people are taking the word of Fauci. But you know what? Your mileage may vary on that. So we got a few things going on. I would be worried that the Fed does a Pearl Harbor if the market goes up any higher. That is a sneak attack coming out maybe after the bell, maybe during the trade, and just give us an old B slap to the market for everybody thinking it's over. Of course, numbers this morning made a lot of folks think that the Fed can't act, and my guess is the Fed having a crisis of confidence in its ability to communicate with the market. And I bet that I've got that somewhere. In fact, let's see out here. Do I have that? Classic movies, failure. Do I have it? I probably have it somewhere. I'll have to look for it. I'm thinking he thinks that he has a failure to communicate. Tip of the hat. Nod of the nose there to Cool Hand Luke. But I think they're probably thinking that everybody's just, with this kind of news, we can't have any rate hikes. And I think Jesse Livermore said it best, which is that politicians and many traders are always thinking positively and not thinking that much negatively. And I think that they should be a little bit more on the cautious side than they are. 877-927-6648 for Tim Ord today. He'll be in the next segment, and we'll find out what he has to think. We've got 3 new charts. If you've got some questions for Tim, call in early and you may or email me early so we can get those symbols to him during the breaks, and he can take a look at it. He's not set up to do the quick draw McGraw. He needs a few minutes to look at that stuff, but we'll hear what he has to say. Got 3 charts from him already. If you want those charts and during the break, I'll email them to you already so you can follow along at the home game. Just email me at path@tfnn.com. And what else do we have here? That's kind of it. Let's do a little bit of history, then we'll get back to the markets, and I want to show you one chart before we go to Tim Ord. But what do we have? A little history.
Then it's all just a little bit of history repeating.
It is nothing but history repeating. And on this day in 2003, Apple Computer launches the iTunes Music Store. The store sells music for 99 cents a song, along with the iPod, iTunes software. It's not the first service to sell digital music, but it will become first to gain widespread popularity. The service will be an instant success, selling over 1 million songs in its first week and going on to change the music industry forever. The iTunes Music Store is now the #1 music retailer in the United States, surpassing Walmart in 2008. But, of course, what do we have on this also? We have that musicians and writers are making about 15% of what they made in 2003. By 2010, they were making 50% of what they were making just on the recording side just 7 years earlier. And now it is about 10% of what it was in 2003. Apple made a huge market and killed off the radio star in the process. Let's go ahead and look at this chart that I want to get to before we get to Tim Ord. And that is the QQQs. So, of course, everybody's diving in. We've got to buy. So that means we should have tons of volume, right? We should have broken through already the 3x3 down slope. Nope. Yesterday, 111 million shares. The day before, 105 million shares. The day before that, 101 million shares. This is all in QQQs. And, of course, what do we have so far today? Let's go back to 1984. Yes, we have a wimpy 62 million shares so far, 62.5 million. Now, does that mean that I'm going to go dive into the short side of the pool? No, but after earnings tonight, if they are tepid, I think we have an opportunity here to short the dip. We will return.
Are you grinding in the market, but seeing little to no return? Or are you a successful trader, simply looking to make your job a little easier? Learn to take the path of least resistance with David White's powerful trading newsletter. David White is an accomplished trader whose deep understanding of technology and the markets allows him to consistently find and share winning trades. Support and resistance define the ranges in which stocks trade. By understanding these trading ranges, David White is able to find the path of least resistance. David White's trading newsletter, The Path of Least Resistance, is delivered daily before the markets open to make every trading day an easy win. Visit TFNN.com today and subscribe to David White's Ultimate Trading Newsletter for $119 a month. And try all of our newsletters risk-free with our 30-day money-back guarantee. Take the path of least resistance at TFNN, educating investors.
What's separating you from the most successful men and women on Wall Street? That's right, information. Having all the information gives us the perspective we need to place the right trades at the right time. The TAS Profile Scanner is the premier market profile-based scanner. Powered by its acclaimed TAS proprietary algorithms, this feature-rich scanner instantly filters over 2,500 plus global financial markets, such as stocks, ETFs, commodities, futures, and Forex. This powerful suite of tools leverages instant trade filtering and strategy formulation to show you emerging trades before they happen. For a limited time, you can save $100 off your first month by using the promo code UPGRADE, and you still get a 30-day money-back guarantee, so you have nothing to risk. Level the playing field with the TAS Profile Scanner, which you can find under the Services tab at TFNN.com. Sign up today.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
And we are back. And, of course, every few weeks we try to have Tim Ord on when he's available. So, of course, star of the silver screen and the 3x4 tube also for many years. Newsletter writer extraordinaire for 30 years. And I would say he's my friend. Anyway, Tim Ord.
You're my friend, Dave.
Ord-oracle.com. And we'll have a big hug here and sing Kumbaya, but probably nobody here wants to hear that. So we're going to move on to the market since we've been without you for about 3 weeks. Yes, I have a friend. Somebody in the Tiger's Den talking about that. Boy. You know, I don't know if you've ever heard it, but you know the difference between a friend and a good friend?
No.
A friend will help you move. A good friend will help you move a dead body. Now that's how you tell the difference.
Yeah.
I have a lot of good friends and not too many friends. So anyway, we're looking at a market that's up on the S&P's about 100 points, about almost 600 points on the Dow, and the Nasdaq's up 370. And we're going to go to you. I don't know if you want to go to charts right away or you have something else you want to talk about.
No, we can kind of, it's really interesting what's going on in the market. I think a lot of people are kind of confused here. And this, what I'm going to show over, these free charts, kind of where we are in the market. And I was supposed to be on last Thursday, and my computer was on the fritz, so I couldn't do the last Thursday thing. But anyhow, I'm still bullish on a short-term basis. And we can go over the first chart. The first chart is American Association of Individual Investors Bull-Bear Ratio. In other words, the bulls right now in the individual investors, the bulls right now is 16.44%. That's pretty low. And the bears right now are close to 60%. Well, anyhow, that ratio works out to about 0.28. And this chart in the middle goes back to 2009, shows all the times on that blue line when this ratio is below 0.40. Again, we're at 0.28, one of the lowest times going back to 2009. So basically, that's kind of a bullish sign. In other words, individual investors are real bearish here. And I've circled the times on the chart above. The top chart there is the S&P 500. And in most cases, sometimes it happened even in uptrends, like back in 2013, the market never took a dip, but for some reason investors got bearish. That implied that the rally should continue, which it did. But most times it comes at real significant lows. It didn't come, or it came close at that March 2020 low. It didn't quite get down to 0.4. But on that rally up, it got below 0.4, and the market continued rally. It looks like another couple of months or so. But we've been setting that, I think last week we're at 0.43. Week before, I think it was 0.32 or something, and now we're at 0.28. So about the last 3 weeks, we've been below 0.4, and which is kind of rare. The market really took a dive here, not counting today, but over the last week, it took a dive, I guess. A pal was talking about raising the interest rates 0.5% sometime in May, and market heard that, and it just tumbled. Which is good. If it tumbles and you don't get panic in the market, that's a bad sign. Well, we really did get panic in the market. So I think what we're looking at right now is probably some sort of a worthwhile low, and which kind of, and actually we can talk about panic on the next chart if you want to.
Okay.
Pull that up. And I do a lot of stuff with the ticks and trend and actually the VIX, but I just wanted to show the ticks and trend kind of scenario right now. This chart, the top window, is a 10-day trend. And normally when it gets above 1.2, it's usually a kind of an intermediate-term sign. It takes a longer-term view of the market. So ideally when you get to around 1.2 or higher on the 10-day trend, usually you can expect more than a 1 or 2 week bounce. A lot of times they rally for at least a couple of weeks, sometimes even a couple of months. We didn't quite get there at this low. But the next, or let's just go to the bottom window, which is the 5-day arms. And it did get above, readings above 1.2 or bullish yesterday, or day before. It was like 1.4. Yesterday was 1.33, which is bullish. And the 3-day, that was the 5-day at the bottom, and the 3-day is right in the middle. And it readings above 1.35 or bullish, and a couple of days ago we had 1.55. Normally, if you get the 3-day and 5-day both in bullish territory, usually you're setting at a worthwhile low, and that red lines show those times in the past when that has happened. There was a failure at the April high. For some reason, the trend, both the 3-day and 5-day, did get in bullish territory, and the market still went down. It happened back in November of 2021. You got panicked, but the market still kind of fell for a couple of weeks there. But this one should work because when the trend really gets that high for that many days in a row, it's usually not just a day bounce. It's usually, a week, 2, 3 weeks, sometimes even, a couple of months or something. So it could be, with today's rally, I think, going on here, I think it could last, probably into mid-May or better. That's what I'm thinking.
Do you have any feelings on like the Qs bouncing on half the volume in the last 3 or 4 days? Right now, they're in the.
Go ahead.
No, I was just going to say, I've got some very low volume readings across the markets now. We haven't closed yet, so maybe we get a bunch of people jumping in before the end of the day. But right now, we're doing about half the volume we did the last 4 days. So I'm not feeling kind of warm and fuzzy about everybody deciding to buy here today. But we got a lot of things tonight. So I'm wondering, how do you feel about that at least on a shorter term basis, where you may want to put on a position and just go, well, it's already 100 points higher and there's no volume, so maybe I get a 50-point pullback, or maybe I go back and retest the other day's lows one more time?
Well, it's actually I've even done some studies on really if you're really looking at these big rallies like off the March 2020 low, nobody believed that rally, and volume was kind of lackluster off those. And it's kind of hard to say how that is, but sometimes these big rallies, and I noticed in the past when I was kind of just kind of getting started in the market, I was always really volume associated with, and you have to have volume off the bottom and stuff. And sometimes that's not true. And I was a big bear at one point coming off of a major low. I can't remember what major low that was. But the market kept rallying on lighter volume, and it just kept going. So we can talk after the come back.
Okay, we'll be back with Tim Orr to the Orr-Oracle.com.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN has just launched their new trading room, the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
As we return with Tim Orr to the Orr-Oracle.com, we're looking at chart 2 and looking at the trends. I remember kind of you talking early on, and I want to say it was the March 2003 lows or March 2004 lows, where I did hear you say that no one's going to believe it. And I forget what it was. I think we were like at 670 or 680 on the S&P 500, and it went up to 1,000 with no volume before it started running. But is that an indication of if we do get a little bit more, is this an indication that we've got some kind of low like that where you can move 30% in the S&P and still not have any volume?
Yeah, actually, a better indicator, you need a sign of strength off the bottom, and they always talk about volume a lot, but another sign of strength is advanced Klein line. And actually, I found out the advanced Klein line, trumps volume as far as, rallies are concerned. Right now, we're in a ballpark. I just eyeballed. It looks like about 4-1 to the upside. And you need the volume to the upside compared to the downside also. What I found out, kind of like really these massive lows you get everybody that pretty much is out of the market. They sold. There's really no sellers left. And the market kind of just goes up, not because there's high demand, because there's no sellers left to sell. And a lot of times that starts off with light volume. So sometimes coming off these lows, a better indicator to determine if that low is going to last is advanced Klein line type indicators, along with up-down volume. And if you go back and look at those ratios, if that, for instance, a good indicator would be the summation index. If that thing continues to go up, I would follow that rally right with it, whether you got volume behind it or not.
Well, they've been kind of straight down.
Yeah, it went straight down in a hurry. I mean, everybody's really kind of on the bearish side here, and everybody kind of the best signs you can see is a puke bottom. And, if you're not short, you got to watch that when that happens, because usually I get phone calls here, telling how bad it is and stuff. And
have you gotten any?
That's usually a bullish sign. So I put it that way.
Have you gotten any?
Yeah, you get emails now, pretty much, not so much phone calls because everybody's on their computers. But you're wrong on this one type things. And if I get 3 or 4 of them, I'm usually pretty confident that probably my trade's right. So,
well, that's why another question I have in here on your first chart from Ron, who asks whether or not just because people are bearish, does that connote that they've actually decided to go short, or just that they are out of the market? Is there anything in that indicator? The first chart that you had with individual investors, it really doesn't say that they went short. It just says that they are bearish, right?
Right, they're bearish. So these are investors. These are not like people walking down the streets that don't know what the market's doing or anything. These people are actually in the market, so they're watching it, so most likely they're sold out their positions. Most likely they took some action to get this, bull bear fund down where it is. They're not the average Joe that may or may not be in the market and has some advisors, trading the market for them. These are people who are active in the market doing whatever they think, trying to make a profit, whatever. So to me, this is a pretty, accurate, I guess you might say. Well, if you just look at the history of this thing, if it gets this low, below 0.4, it's a good thing. You're at 0.28. You're more closer to a low than a high, I'll put it that way. So is it fail-proof? It works pretty well. If you go back and just look at the charts, and, especially, I remember that rally we had in 2020 off that March low. Nobody believed that. And this chart pretty much says what happened, because that chart pretty much stayed below 0.75, for, eyeballing it there almost looks like almost until next March I guess that'd be 6 months, I guess, until September they started believing it. So I think it worked pretty well. It got down below 0.75 and stayed there for 6 months. And I remember everybody in the whole world says, well, it can't, it's got to do a retest. I remember hearing that, and that was a big thing back at that March 20 low, is it's going to go back for a retest. Now it went straight down and went straight back up. So I think it works pretty well. All
right, now, when you're talking about it works fairly well, on a daily, weekly, or monthly time frame?
Well, this is more of at least a weekly. It's not a daily, because this thing's been below 0.3 or below 0.4 for the last 3 weeks. So it didn't pick the bottom. Probably yesterday was the low. So it didn't really pick the bottom, but, probably one factor that didn't help the market was Powell coming out that they're going to raise interest rates. That's when the market tanks. He hadn't said anything, and it might have stayed up higher than where it is right now, but he didn't help the market any. But it still stayed low after that, and finally we get the rally going. So I'm just thinking since this thing's been low for the last 3 weeks in a row, and so this wasn't just a spike low. The sentiment's been low for 3 weeks, so I'm thinking this market will last. This rally will last more than just 3 weeks or think. I think we're, rally into May. How far into May, I don't know. I think there is a May high, but it may come in later May. So I think this rally will have legs, and it'll last for, several weeks at least, I think. That's how I'm doing it.
I'm just looking at some of the things I look at, and option market makers are fairly bearish into about May 20th. So do you think this is something that we could get in or maybe even just fool around here for a while and in the up and down until we burn this thing out and have more of a U-bottom?
Here, well, let's go to the next graph, which is this looks at the little bit bigger picture.
Okay.
If you can pull that up real quick. And this is what I was trying to get to the final, where we are in the market type thing. Anyhow, the top window is NYSE Summation Index. And basically it's to make things simple, it's advanced decline type indicator. And it
this
tells
is
you
chart 3?
Yeah. If you would, go to chart 3.
Okay.
And this looks at the bigger picture of what the market and what needs to happen to really have a bull market situation going. Anyhow, the summation index, which is the top window, is kind of a longer-term indicator, and it's kind of a moving average type advanced decline indicator. You can Google it, and you'll see what I mean. But anyhow, you really see climatic lows normally below minus 700, and this chart goes back to mid-2015, and I could make gone back further, but this makes a point what I'm trying to make. I can hold on. We can go to the third.
Be back after this.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
And we return. And Tim, we have yet another question coming in across the email thing. That internet, probably just a fad in my opinion. But anyway, anyway, when you're looking at this, how do you set your stops back on this to let you know that you're right or wrong on one of your calls?
Usually it's if I get long and which actually I'm long the market now, and I'm kind of there's different stops I use. You know, it's I don't know. I mean, it kind of feels, you know, if I get long because the panic that I was seeing was not high enough and it started hitting new lows and I didn't see panic again, that's kind of how I stop. In other words, sometimes, like for instance, I said on this trend thing, we got panic at the high there stuff, and I was kind of bullish in that time frame. Well, the market started going down right after that panic on the trend because it got up to high levels, and so I was bullish up there. And the market went down some, and the panic didn't continue because once you get panic, you should continue to get it, and if you don't, then for some reason the market sentiment's changed, and so anyhow, at that top I was long, and I got out because the panic didn't continue in the trend. So that's one of the reasons how I watch the markets. More of a not price range, is more of a panic situation. So as long as I get panic, I'll hold that trade. I'll put it that way. I hope that answers that question.
Good enough. What else do we have left on chart 3 here?
Yeah, chart 3, it's going back to the NYSE summation index, and and anyhow, usually when you get exhaustion lows, the summation index, I'm calling summation index, usually gets below 700, and that's a red bottom line there. And if you go down and those minus 700 areas, and those all picked out major lows in the S&Ps, those blue lines there. And normally, after you get an exhaustion low, what is needed off that bottom is a sign of strength. And a sign of strength is when the summation index, it's kind of like a advanced decline, has to surge above around the plus 1,000 range. And so I got circles around minus 700 there, and I got circles at plus 1,000. We're sitting right today, or at least yesterday's close, around minus 418. Normally between the minus 700 to the plus 1,000 range is give or take, but it's around 2 months. It can be sometimes 3 months, sometimes 6 weeks, but it's usually around 3 months. Well, March 10th, we hit minus 700 range. So around May 10th, you should see plus 1,000. Now, if we don't get a sign of strength up to plus 1,000 around mid-May, then probably we don't have a sign of strength off this low, and the market do something other than a bull market, either a trading range type things or even a bear market. So this rally that in my opinion, started today needs to continue until mid-May to get to plus 1,000. But say we only ended up with maybe plus 200 on this rally, on the summation index, that's a bearish intermediate term sign. So if we do top out, say, plus 200, plus 400 area or something in that range, then you probably could end up with a good short sale. So I don't know. May 10th or mid-May is not that far off. It's only a couple, 3 weeks away. So this rally has to be pretty powerful to get there. So I don't know if it will or not.
I've got another question from Ray, who says that as far as I can see, the summation index is still heading down. I don't know about today.
Right.
But how long will you be on the other side of that if that continues lower?
Well, I think it's turning today because you got a Vance Klein, or plus 400 on the summit. Yeah, it would take a couple, 3 days probably to get back to, above, for the McCollum oscillator to get above zero. We're minus 200 on the McCollum oscillator as of yesterday. So tomorrow tomorrow probably won't do it, but next week probably do it. So I'll be watching real carefully.
Okay.
So
another question from the Den.
Yeah.
He says, what does back to ice mean?
Well, you broke through ice. Okay.
Yeah, but what's ice mean?
It's a support area. Or back to ice is resistance, I guess. You broke through support. Now support becomes resistance. So you need to get back above resistance. So it's just a support area in the market. In other words, it was, I don't know, whatever index, say you got a stock has support at 10, and it fell through ice. In other words, it went to below 10. So if say it went to 8, then to break above back to ice again, you have to get above 10. So ice is just a support area on that particular issue.
I'll add to this because a lot of people don't know what you're talking about. There was a guy named James Wyckoff, and he had a bunch of terms and ways that he looked at that market. If anybody wants a link to those, I'll just email me at path@tfnn.com. But he had a lot of things like you're jumping the creek and you're at ice, and they were all allegories to the way he thought the market was and where it was at. Is that a good explanation?
Yeah. Yep. Okay. That is good. So, So somebody on your watch list here is Reed and Weisskopf, I guess, assuming because I haven't heard that term for a long time.
Yeah.
So,
but yeah, I think it's when everybody just thought the market was going higher. I think that over the last 5 years or so, a lot of people just kind of wandered away from it because the Fed was just going to go out there and throw more money at the problem. And that was kind of it. But now that maybe they're not throwing as much money at the problem, maybe it's more of a trader's market these days, and we'll see more Wyckoff-style folks coming back to the fold. Anyway, that's what's that?
Well, anyhow, we need to keep talking a couple of weeks from now, and the reason why, if we see where the summation index is, if we do get, 900 may be close enough, but 1,000 be ideal. But if the market, kind of stumbles here going from here, then that'd be a bad sign in the midterm. So what I'm saying is this rally right now that I think started today really has to continue in a big way for this summation index to get to plus 1,000. So we can maybe even come on next Thursday if you got time. We can take a look at this chart again.
We can probably do that. We'll see how things go next week. It's a little bit of fun buying Monday and Tuesday, so we probably have a little bit of a bullish bias going forward. The real trick, of course, is going to be tonight. We've got we're going to have our head in the lion's mouth with earnings for just a ton of folks. So volatility probably will reign supreme for the next couple of days anyway. So it may take a little bit for that to sort itself out. I want to thank you, Tim, for being on. We'll talk to you soon. I'll talk to you Monday or Tuesday. We'll see whether or not you want to come on for next Thursday. Again, Tim from Tim Ward from Ward-Oracle.com. And if you want his charts, just email me at TFNN.com. Thanks again, Tim.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
As we return, I think Tim Ford coming on at the end today. Of course, it's all about earnings and mostly after the bell tonight, I suspect. Of course, Apple pretty much all the time is at 4:30. Yeah, we've got a ton of other stocks. But the big thing is the rally. I disliked Facebook being creamed before earnings. And I dislike Apple running like a scalded dog before earnings to the upside. You are going to close just slightly above or right at the resistance level as the 3x3 comes back down. Another one is the same thing, and that is the Amazon doing exactly the same, right at the 3x3 downtrend line. Again, volume. It's okay. Is it great? No. Does it have to be? Probably the good thing is that you did go back and test this gap and kind of got into it yesterday with lighter volume. But the big problem is the energy on this one in Apple is about the same on the way down, maybe just a little less. This isn't a screaming buy, so maybe we're in a trading range a little higher, a little lower, at least in these stocks. But we've got it, like I said, a bunch. I've got about 20 or 25 stocks. But last night was generally the big stocks did okay, and the little stocks all got creamed. We have some that were just such amazing blowouts. What are they down 50% today? So it is a tale of two cities, or rich man, poor man. We've got a handful of stocks that pretty much are 60% of the S&P or of the Nasdaq 100, and about a fifth of the S&P 500. And everybody gets into those, and of course everybody's in funds, and if you're on the wrong side of them. Now, do I have enough time to handle this question? I do not. I'm going to talk to you about why I like what Tim talks about in the investor sentiment, but I like it when they back it up, actually buying fair positions instead of just saying, I think it's going lower. Kind of like when they say, I know it's going lower. So we'll talk about that tomorrow on another action-packed episode of our Trading Hour. So when you can, not when you have to. See you tomorrow.